man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you, with you. Oh man, your boy Kevin just lost lots of money. Oh, but that's okay. I am with you. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it, find the dip, find the dip. Here we go, come on, push it. Oh my God, what's happening?
Welcome everybody. Welcome to my channel, The Financial Trader's Mindset. So in this video, I'm going to talk about how AMC and GME, how they destroyed the apes. Now, this is a fascinating and mind-blowing chain of events that has happened over the past few years. Right behind me, I have the chart of AMC, right? Nobody was interested. There was no apes, prior to 2021, right? Until the pump happened. Everybody was on board. Everybody wanted to be an ape, right? It was that it was just a chain of events that came together and that created this community, right? And it's just so fascinating on how one thing can bring together a group of people, a very large group of people, for one cause, right? And then, of course, after the decline, the boom and bust cycle, the pump and dump, right? Whatever you want to call it, you can see it now looking back into the past and just looking, it's all hindsight, right? You're just like, wow, look at that. But for anyone that was in it during that time, it was really something special to them, right? Now, what I want to talk about here is how the stock market works and how it can affect the human psychology. Well, maybe not affect the human psychology. How about destroy just the human psyche? And just, there's probably people that were part of this movement that will probably never invest in the stock market again. They are so destroyed and they feel so betrayed by what has happened that they just will never invest in the markets again. They will call it a scam. They will say it's rigged. They will say it's unfair. Now, yes, the market is unfair. It's not fair to everybody. The more capital you have, the more of an advantage you have, right? But I'm not going to get into all that. I specifically want to talk about this event but to include, GME, AMC, BBBY, right? All these meme stocks. Now, I'm going to talk about some of the good it did initially. It got in a lot, prior to this event, the stock market, I'd say the majority of the younger generation did not care about the stock market. They didn't care to invest, right? Most just didn't want to take the time to learn. It just wasn't interesting to them. For anyone that has traded the stock market for quite a while, like I have, I've been in the markets since the great financial crisis. That's when I first got in, during the great financial crisis. And over time, the younger generation, not many really were interested in trading stocks, investing and all this stuff, right? Like nobody cared, right? Not many cared, right? I'm not going to say everybody, just most people. Now, fast forward to, to the COVID crash and then the stimulus and everyone at home, right? And that's when everyone started getting interested in the stock market. And you have this pump. And then you had songs just like this one.
Oh my God, what's happening?
First of all this money by Wall Street is making me sick. 140% of GameStop was short. GameStop was short. You can't allow Wall Street to short 75% of its stock, crush these companies into the dirt, thousands of stocks into the dirt. Then when the individual makes money, everyone's entrepreneurs. I have a kid who bought a house, paid $50,000 and bought a house. After decades of the shorts, you have to accept the fact that individual investors are playing the same game that you're playing, and now you're losing.
Here we go, come on, push it, buy the dip, here we go, come on, push it, buy the dip, here we go, come on, push it, buy the dip, here we go, come on, push it, oh my God, what's happening? Here we go, come on, push it, buy the dip, here we go, come on, push it, buy the dip, here we go, come on, push it, buy the dip, here we go, come on, push it, oh my God, what's happening?
But I digress. You had to be in the stock market. If you weren't in it, you weren't making money. And everybody wanted to make money. So everybody jumped in. And lo and behold, it created this community of people that love to invest in these meme stocks. After that initial excitement is done, right? You can see how it happens in the chart, right? How people just pile in and want to be a part of the movement, right? And this is all about that community and everybody rubbing elbows, right? One thing that we must remember is that it is the stock market. And when it comes to money, a lot of people get weird. A lot of people get strange when it comes to money, right? Especially their own money. A lot of people will tell you one thing and then do something else behind your back, right? Money can make people do the weirdest stuff. And I'm sure you guys have your own stories and experiences with people that get weird around money. So, while they're on the forums and on chat rooms and on social media, on Twitter and wherever, telling you to buy the dip and diamond hand hold, like that guy right there, how he's holding till the end, either zero or hero. What has to go through someone's mind? What is the psychology of somebody that allows them to look at this stock? Say they would have looked at this in 2018, they would have been like, no way, I'm not going to invest in that. But in 2021, now people want to invest, right? So, it's just funny how that is, if you really want to understand the mindset of the average investor, really study this, really study these events and just understand how people will think in the markets and then create an edge around that, right? But anyways, so how did AMC and GME destroy the ape psychology and destroy shareholder value? What did they do that was so devious and something so cynical that they should be locked up forever for, right? What did they do? Now, probably most of you, especially those that probably are invested or have invested in this, are probably not going to want to hear this, but they didn't do anything wrong. Now, maybe morally questionable, right? But we have to think that, what is the stock market? The stock market, in simple terms, is a way to raise funds. The stock market is a fundraiser. The stock market is a vehicle for a company to be able to reach into your pocket and take some capital to run the business, right? It's a fundraiser. When AMC was they were trying to dilute shareholder value, right? You know, they see this pump. They want to sell shares, right? To dilute the value of shareholders to save the company. You got to think AMC was on the brink of bankruptcy, right? The company was poorly ran. You know, I don't know the details of it. I don't follow AMC that close. I'm not that interested in it. But when this happened, this was a rare opportunity for them. This was a miracle for them. They were presented a pot of gold. But in order to access it, they had to get the buy-in from shareholders, which were the APES. Now, the APES banded together. They fought off the company from diluting for as long as they could. But at the end, they found a way to dilute. Now, what's fascinating here is that AMC found a way to dilute the shareholders without them realizing until it was too late. Right now, the stock is trading about $12.73 as of today. But that's after the reverse split. So when the company, AMC, could not dilute their shareholders, they created this spinoff of APE shares. And there was this whole buzz around it, right? They were very clever with it, right? APE stands for AMC Preferred Equity. You know, AMC gave NFTs out to APE holders, and it was just this big whole event that kind of rallied the AMC apes and get them excited, right? And then you had prominent figures like Jim Chanos going on CNBC talking about how he was long APE shares and short AMC because they are supposed to be the same value. They're supposed to be the exact same price. They should be, a very similar value. So they promoted it as this pairs trade, right? Which was even crazy. When I heard this and saw this live, I'm like, what is going on here? But yeah, they sold it that way. And then you had, when that happened, I'm just rolling my eyes. I'm like, this is ridiculous. Do people actually believe this? And then you had Meet Kevin, which you can see in this video right here, wherever it is. But Meet Kevin, like immediately after they released or launched the APE shares, Meet Kevin broke it all down on what would happen. And he was right. Check out the video and then look at the comments. You'll see how angry people are at Meet Kevin for creating that video. It's fascinating. It's fascinating how blinding a belief can be, right? If someone truly and strongly believes in something, any other opinion or fact that doesn't align with theirs, people get weird. People get strange when it comes to money. And it just blows my mind. And it happens time and time again. I think I have an old video back in like 2020, 2021, talking about how all this will end. The AMC hype. If I find it, I'll post it. I'll post it above. I'll post the link. When people go on CNBC and talk about something they're doing, right? Like say Jim Chanos, when he's like, I'm long APE, short AMC, right? What is the position size, right? Did you just do one share of each? You know, like how big of a position? Maybe he announced it. I didn't look into it too much. So if someone knows, you know, post it in the comments, you know, to give me the facts. But I just don't care enough to look into that. Either way, it wasn't said on that video broadcast on CNBC, right? Maybe somewhere in a filing somewhere it shows, right? But I just wish it was disclosed when you make a trade like this and you announce it to the masses through large media outlets. You have to at least, you know, it doesn't have to be the exact dollar amount. It should be at least a percentage amount. This is a percentage of my portfolio that I'm putting into this trade, right? That's how it should be, because this guy could have just, you know, he could have just did one share of each and said, yep, I'm short and long, you know, and maybe, you know, I'm kind of putting my tinfoil hat here, but what if it was a way to get the AMC apes, you know, happy and rallying together and buying some of these ape shares, right? To create some liquidity for AMC to dilute. I don't know. I'm just throwing it out there. Don't take it as fact, right? That's my tinfoil hat. I'm going to take that off now. Put it right over there. But it's just fascinating, right? So now, hopefully I'm painting a picture here, right? Now all this is set in motion by AMC. They have the ape shares. All they need to do is wait. They just need that value of ape to stay high just long enough to dilute, right? And that's what they did. As you can see with the reverse split, I think AMC, you know, it was a 1 for 10. So for every 10 shares you owned, you got 1 share, right? With the reverse split. Price is like about almost $13. Divided by 10, the pre-split, the shares are now worth about $1.30. This is less than what it was worth back even before the pump. I think it was around $2, right? It was worth $2-3 an AMC share. So now it's worth less than before the whole craze, the whole pump. It's incredible, right? And I think this is like the final blow to the apes, right? Anyone that is still in it now is probably just, they've lost so much money that it just really doesn't make sense to sell, right? You're just holding on to a lottery ticket, hoping one day something amazing will happen. And that is the way the market works, right? All this selling here on AMC, you know, yes, some of it might be dilution from the company, but this is your fellow ape that finally gave up over time and said, screw it, I'm out of here, right? You know, maybe they're on the forum or on social media saying, I'm still holding, I'm holding, diamond hands. But in the back, you know, once they shut off that social media, they go into their accounts and dump off their shares, right? Like I said, people get weird with money. It's truly amazing, right? To see this happen and just looking at it in hindsight, you know, to be able to predict this, like say, you know, Meet Kevin's video, right? Where he, you know, not predicted, but he laid out exactly what was going to happen because it's right. It was all there. It showed it all there. It gave them the ability to do what they needed to do to dilute, right? People still did not want to believe it. People were blinded by faith and hope, right? Now let's take the side of the devil's advocate, right? Let's put ourselves in the shoes of the CEO, Adam Aron. Did he do the right thing? I mean, you truly got to understand how a company works. And what is your job as a CEO? That's a tough job, right? you really like, it probably eats at him. I'll say that. It's got to eat at him, and if it doesn't, then, I don't know. But for a normal human being, for you to have that weight on your shoulders, that for the rest of your life, knowing that you skin the backs of your loyal shareholders to save the company, which is what he's paid to do, right? But he is the face of the company. He's going to take all the anger, all the hate, right, from the shareholders that were unhappy about what happened and how everything unfolded. But at the end of the day, he did what he was paid to do as a CEO. Now, just some takeaways from all this. When you're invested into a company, it's very difficult to stock pick, right? Especially long term. And when you invest into individual companies, and especially for the long term, I'm just talking about long term here, long term investing. If you're trading, that's something different. But for long term, if you really believe in a company, you still have to invest wisely. Understand that at any time, that one company can go to zero and you could lose all your money. So are you okay? The only thing that you should ask, if there's one thing that you do before you invest into a stock, into an individual stock, the one thing that you need to ask yourself is, am I okay losing all my money invested into this? And if that answer is no, or if it's a hard no, and you can't just be like, yeah, I'll be fine, because I know how it is. You get excited about an investment and you just like, fuck it, let me go in. It can't go to zero. I'll get out before it goes to zero. If things go wrong, I'll get out. No. There are events and ways where companies can keep your attention and keep your focus away from, what you're losing and what you may gain, right? The stock market is forward looking. It looks out to the future. And what you're investing in, you're investing into that probable future that the stock market is pricing in. You're not investing into a stock or a company at present value. You're investing at a future value. And then hopefully by the time the company gets to that perceived and they realize that perceived value in the future, then your stock is worth what you bought it for. But then by then, hopefully they're still on a path to growth at that time, to where your stock is worth more because there is perceived future growth from there, right? So it's this game of like, you have to have belief in what you're investing in will bring to fruition what they're promising. And then on top of that, giving added value on top of that. That's why it's very difficult to invest long-term into individual stocks. Yes, you could hit it big. Yes, you could make it rich. But at the same time, you could lose a lot or not make much at all. So for long-term investing, it's very difficult. But understand what you're investing in and what the risk is. What am I investing in, right? If you're an AMC ape, you're investing into movie theaters. Movie theaters have been declining for probably a decade now, at least. What makes you want to keep pumping money into it, right? Like, these are the things you have to ask yourself. Now, say it was a company that's on a good trajectory. Say, I'm not going to name any companies, but you have a specific company and it's on a good trajectory. They have good earnings and everything is great. Yes, that can be good. But at the end of the day, what you put into it, just count it as it going to zero. I'm trying to justify like investing more and not having to worry about it going to zero, but there's always that chance. And, you know, say like you take a company, like let's say Apple, right? Amazing company to invest in. But if it's on a decline, you won't know it's on a decline till it's too late. And you could be down 50% in your investment into Apple. But by then you're probably gonna have the mindset of, well, you know, I might as well just hold. And then say, God forbid, right? Like we don't know, but what if Apple goes to zero? What would happen then? People don't have an attention span more than 30 seconds, right? I bet you most people have clicked off this video already. If you're still watching, then that's amazing, right? You have a good attention span, or you're really interested in what I have to say, which I'm grateful for. But you have to think, like, most people don't have a large attention span. They get bored easily. They forget things, right? Probably no one remembers when Jim Chanos was touting AMC and APE, the best pair, or not best pair trade. I'm not going to put words in his mouth, but how it was a pair trade. You could long APE and short AMC and you're good, right? Wow. That is, oh my God. Nobody remembers that though. But I just want to say that, you know, when things get exciting, really ask yourself, what am I investing in? And am I okay with it going to zero with what I'm going to invest into it? Is it okay if that goes to zero? If not, either lower the amount or just don't invest. You know, you missed the boat. When, you know, just a good solid rule of thumb for me, when I see an investment, if I'm excited and my heart's racing and I'm like, oh, I got to jump into it, I got to pause. I'm like, okay, something's not right here. Why am I too excited to jump into this at any price? Right? That's what you have to ask yourself. Now, I'm not saying that you have to be a trader and learn charts and all this jazz, right? You don't even have to do that. But for the average investor, the best thing you can do is just invest into the S&P 500. Put the majority of your funds into the S&P, right? Because the S&P 500 is made up of the 500 best companies in the world. On a regular basis, they get rotated out. The one that's 500 is on the chopping block. If they go to 501, they're out, right? And the next best company comes in there and replaces it. So as you can see, it's always being replaced. The ETF, right? Whatever you're in, VOO, VTI, SPY, whatever it is, it's all the same. It's the S&P 500, and it's constantly being curated and replaced with the better companies. So if that's the case, then what happens to that ETF? It's always providing value. And when value keeps increasing, price keeps increasing, right? These ETFs are made to just increase in value over time, right? It's just an asset class that you invest in to keep up or beat inflation, right? To grow your assets, to grow your money, and just play the long game. That's it. And then take a small portion of your capital and invest it into a few different stocks for the long term. You know, call them your lotto tickets or whatever, you know, but you have to think that this here, I feel bad for the person that bought up there. You know, what were they thinking? The FOMO must have been just so great. They just couldn't contain themselves. They couldn't, like, for those that have FOMO'd into something, will get it and understand, right? We've all been there. If you've been investing in the markets long enough, you will experience it, and you will be a part of it, and you will be the guy that buys the top. You know, then you look back and you're like, what the hell was I thinking? So I just want to put this out there and just show this as a reminder of what the stock market is, what it's designed to do, fundraiser, all this stuff. This is just noise. It's just to affect and steer your mind into one direction that they need you to go. It's like lambs to a slaughter, just getting you to that slaughterhouse. AMC needed time. They needed time to pass while keeping the value elevated until it was time to dilute. And that's what they did. All right, so I know it's a long video, but if you stayed this long, I appreciate it. Please like and subscribe. Leave a comment below on what you would like to see. And I will see you guys on the next one. Thank you.